Michael Burry owns 11 stocks in his portfolio. In this video, we're covering all of his biggest positions, including a special bonus at the end that doesn't show on his normal filings. Starting with number 11, BioAtla. Burry is the only super investor in BioAtla with a 1.7% position, owning around $900,000 worth of the stock. Today, BioAtla is an $82 million market cap that's trading 47% above its 52-week low. This is still less than half of its 52-week high. BioAtla is a busted pharmaceutical stock that went public back in 2020. Since then, its stock price is down 98% from its all-time high. So far, the company hasn't earned anything and it's steadily burning down its cash. While this burn's been shrinking in recent quarters, the company may be running out of time. To look at some valuations, the company's well above its net asset value and its tangible book value. Most of this is made up of cash on their balance sheet and it's trading for nearly 3 times this amount. The only analyst covering BioAtla has a 3 times upside for their stock with a $5 price target. Michael Burry is an investor who runs the hedge fund Scion Asset Management. He famously bet against the real estate market in 2008, documented in the movie The Big Short, based on the best-selling book by Michael Lewis. Burry has nearly $200 million in assets under management, and through his 13F and register filings, we can see nearly 60% of his portfolio. Burry's next stock at number 10 is Olaplex Holdings. He again is the only super investor with a position in the company, having it make up nearly 3% of his portfolio. Olaplex is also one of these busted stocks that went public in 2021 and since then is down more than 90%. Today, it's a $1.4 billion company that's trading 50 cents below its 52-week high. As a beauty company known for its hair products, there's a big difference between Olaplex and the last company we looked at, BioAtla. Olaplex actually makes money, including lots of free cash flow. While they had some pull forward in demand that made their sales peak in 2023, the company steadily built up cash on their balance sheet. Keep in mind, recently they've been diluting shareholders even as their stock has cratered. Based on their cash flows, an estimate of their fair value is $4.75, more than double their current stock price. Analysts cover this business and are bullish on it, targeting $3 as a stock price. That's a 40% upside. American Coastal Insurance is next at number 9 with a 5% position of Burry's 13F. He has $2.7 million invested in the company and again is the only super investor with the holding. American Coastal is a $565 million insurance company in Florida that's trading smack dab in the middle of its 52-week high and low. American Coastal had a restructuring in recent years and came back from an all-time low of 30 cents per share at the end of 2022. Since then, it's up more than 30 times. The company's recent quarters will give us the best look at the business, and we can see that they've been solidly profitable and they've grown revenue over this time. They also have more cash on their balance sheet than they had a few years ago. Keep in mind they've diluted shareholders in 2024. To learn more about American Coastal, there's a fantastic write-up on the company nearly 100 pages long that argues that it's worth way more than it's currently trading for. RealReal is the next stock on our list at number 8, and again Burry's the only super investor with the position. This makes up 6% of his 13F and he reduced his holding in the most recent quarter. The RealReal is a $340 million market cap that's trading in between its 52-week high and low. They're nearly double their low, but they're less than half of their high. Again, fitting the narrative of busted stocks, this company's trading 92% lower from where it went public. From its lows just in the past year, however, it's up more than 79%. The company's a luxury online fashion reseller that again hasn't been profitable in its past. It seems Burry's betting that the company can turn the corner toward profitability. That's what the company's numbers have reflected for the better half of 3 years, though they still have a lot of ways to go. Not surprising with businesses like this, they've diluted shareholders and today they actually have negative shareholder equity. Based on the company continuing to improve its fundamentals, we can see that the numbers support an $8.10 valuation. That's nearly 4 times higher than their current stock price. Analysts are also bullish with a $395 price target. That's 73% upside. While there are huge swings from the company being extremely overvalued to extremely undervalued, today a guru-focused value says the company's right at around its fair value. Hudson Pacific Properties, stock ticker HPP, is next on our list at number 7, and here finally Burry gets some company. Chris Davis also has a small holding, but this makes up 11% of Burry's 13F. This isn't the first time Burry's held the stock. He originally had a holding in 2023 and then sold out by the end of the year. In Q2 2024, he bought again, more than doubling his position. Hudson Pacific is a $751 million market cap that's trading very close to its 52-week low. The company owns office buildings and media properties, including sound stages on the American West Coast. Since 2022, their stock has fallen off a cliff. They're down 88% from their all-time highs hit back in 2018. The company's added on more and more leverage over this time, though they still have continued to generate free cash flows that are able to support this. The company's reported net income hasn't looked good for a couple of years, even as their revenues have climbed higher. Thankfully, this doesn't mean that much for the company, and their free cash flows have more or less been steady. Hudson Pacific looks like one of those classic roadkill businesses that Burry loves so much. It's trading extremely cheap compared to its tangible book, ability to generate cash flow, and its historical numbers. The debt here is the big question mark, and it's what you need to research. Guru Focus has the company marked as a potential value trap, though it does say its fair value is as much as 45% above today's stock price. The numbers don't look quite as bullish, with a 42% upside and less than a $7 fair value. Analysts are split on the business, with just a 10% upside and a $5.33 price target. Chinese e-commerce retailer JD.com is next on our list at number 6 in Burry's portfolio. This is a $41.5 billion company that trades just $5 above its 52-week low. Today, 5 super investors own JD, and this is led by Burry. The other 4 are all big-name investors with small holdings, including David Tepper, Howard Marks, Chris Davis, and Chase Coleman. Interestingly, Burry trimmed in the last quarter while David Tepper and Howard Marks added. From its all-time highs back in 2021, JD stock is down 76%. Yet, at the same time, the company's business has trended upwards. While their growth, especially in their revenues, has more or less stalled in the past few years, they are generating a lot of free cash flow. This means their returns have improved from where they're at, and they have a lot of cash on their balance sheet. At the same time, JD's among Chinese companies returning capital to shareholders. They have a 2.84% dividend yield today, and they're buying back a small amount of their shares, giving them a 4% shareholder yield. The numbers look like JD could be undervalued, especially if they continue to grow in the future. Right now, they're even trading below their gram number. A GF value comes in at $45 per share, and that's 42% above their current stock price. Analysts are around the same level of bullish on the company, with a 44% upside and a $38 target price. All of them have either buy or hold ratings on the stock. Before we get into Michael Burry's top 5 stocks, if you're enjoying the video and you want to get even more fair value content, you can do so on our Patreon absolutely free. If you want to support Global Value, you can also do that by either subscribing there or by becoming a channel member. At number 5, we have Baidu, another Chinese tech giant. Again, 4 super investors own the company, including overlap by David Tepper and Chris Davis. Burry's the biggest shareholder, with 12% of his portfolio invested in the company. Right now, Baidu is a $25 billion market cap that trades exactly at its 52-week low. The leading search engine in China, Baidu is down significantly from its all-time high hit back in 2021. The company had been somewhat cyclical, but had been a compounder for most of its history. In the last few years, it's down 76% from its all-time highs. This comes as some growth has been pulled forward and looks like it has stalled in the past few years. Still, though, Baidu has a ton of cash on their balance sheet, and they're getting more and more profitable. While not stellar, since 2021, they've improved their returns on capital. Keep in mind, after having bought back some shares, the company has diluted shareholders from 2021 onward. That's not out of the ordinary, but it was big dilution in those years when it was very high stock prices. Almost amazingly, Baidu's trading at its tangible book value, and it's well below its gram number. Again, the stock looks very cheap compared to its cash flows. However, because of the fundamentals in this business, there's a value trap warning, even though a GF value is 39% above today's stock price. Analysts are mostly bullish and want to see the stock trade higher, with a 56% upside and a $126 price target. At number 4 on our list, we have Molina Healthcare. Michael Burry is one of just 2 super investors with a holding in the company, and he bought his shares in the last quarter. Molina is a $19 billion company trading in the middle of its 52-week range. Molina Healthcare is a Medicaid insurance provider that's been a long-term compounder in its history despite this recent blip. The company's earned very high returns on capital, especially from 2018 on. These are showcased by huge improvements in their numbers, and they both have a ton of cash and lots of free cash flow. Guru Focus has a fair value for Molina maybe around $411 per share. That's 20% up from today's stock price. Surprisingly, analysts are less bullish with a $365 target price. That's an 11.5% upside. At number 3, we have Shift4 Payments. Burry's one of 2 super investors with the holding, the other being Dennis Hong of Shaw Spring Partners. Both have around 14% of their portfolios in the company. Shift4 is just over a $4 billion company that's trading $10 below its 52-week high. This is a payment processor that's posted strong results since going public. They became profitable in 2022, and since then that's continued to climb, including growing free cash flows. Not out of the ordinary for tech companies, dilution is something to look out for on this business. Still, the stock is pricing a lot of growth in its future with a $99 GF value for the company. Analysts think the stock's closer to its fair value with just a 5.5% upside. Chinese tech giant Alibaba is the top holding on Michael Burry's 13F, but there's a secret holding that we're going to look at next. In the meantime, Alibaba makes up 21% of that 13F, and Burry added to it in the most recent quarter. 9 super investors are owners of the business, including David Tepper, who has a 12% position in the company. This is far from the first time that Burry's been an Alibaba shareholder. He's continued to add in every quarter since he bought into the company again in the third quarter of 2023. Alibaba's increasingly returning more capital to shareholders with a newly instituted dividend yield and nearly 4% share buybacks, giving it a 5% shareholder yield in the last year. Alibaba came to the attention of most value investors after legendary investor Charlie Munger made it a major position for his portfolio in the Daily Journal Corporation. But from where he bought in, it's down more than 50%, and he called it one of his worst investing mistakes of all time. Its numbers look like they've both been pulled forward due to COVID, and they've been hurt by the weak macroeconomic environment in China, including low consumer purchasing. Still, though, Alibaba's added a ton of cash to their balance sheet, and again, they're becoming more and more capital friendly to shareholders. They're returning a lot of this cash, and they're trading for just single-digit free cash flow multiples. On that basis, the company looks potentially very attractive and trades at its gram number today. Today, a Guru Focus value for the company comes in at $98, which is 17% above their current stock price. Their cash flow numbers support a stock price maybe as high as $189 per share, more than doubling from their current price. Analysts are also bullish on the company with a $110 price target with a 35% upside. Now, the number 1 stock in Burry's portfolio that doesn't show in his 13F but shows through the UK registrars is British American Tobacco. He owns their shares traded in London under stock ticker BATS, but it also trades in the United States under BTI. This is more than an $11 million holding that's on par with his position in Alibaba, but just slightly bigger. British Americans performed very well in 2024 with their stock up more than 30%. Today, there's just one other super investor, First Eagle Investment Management, with a small holding. On top of their great stock performance, BTI pays a huge dividend, yielding 7.7% today. They also buy back shares and have nearly a 9% shareholder yield despite climbing by 30%. British American is a $77 billion market cap that's trading at its 52-week highs. These are up $10 from their 52-week low. The company's stock price peaked in 2017 and it's still down 50%. Up until that time, it was a long-term compounder, with them more than 10xing since the late 1990s. British American is the second largest tobacco company in the world. They have many leading brands including Dunhill, Kent, Camel, American Spirit, and Newport. After its merger with R.J. Reynolds, the company added a ton of debt, but since then they've generated a lot of free cash flow. Their earnings last year looked bad due to some write-offs, but the company still steadily performed, increasing their revenues and growing their cash flows. Guru Focus says that the company is trading around its fair value at $29 per share. These are all of the 11 stocks we know Michael Burry owns. Which stock on this list is most surprising to you? Let me know in the comments below.